Did you know an HSA might just be the most powerful tax tool that you are not using? For Pokemon content creators, card shop owners, or even casual trainers with side income, this one account could help you count them all and keep it all, legally of course. Before we dive in though, make sure to hit that subscribe button so you don't miss out on more strategies to cut your tax bill. A health savings account, or an HSA, is a special account designed to give you a rare triple tax benefit. First, you can contribute with pre-tax dollars, lowering your taxable income in the year of the contribution. Second, your investments inside the HSA, they grow tax-free, just like a retirement account. Lastly, when you use the money for qualified medical expenses, your withdrawals are tax-free too. It's like being triple resistant to income taxes. And that's the type of matchup you don't get very often. So who can use an HSA? Not everyone can just walk into the Pokémart and pick one up. To contribute to an HSA, you must be enrolled in a high deductible health plan for your health insurance. That means your insurance won't kick in right away. You'll have to pay more out of pocket before your coverage starts. Usually, you sign up during the open enrollment in the fall, but you might also be able to enroll if you've had a life-changing event such as a job change, getting married, or losing coverage. Choosing an HSA is a bit like choosing your starter Pokemon. The choice sets the tone for your whole journey. For tax year 2025, the contribution limits are as follows. If you're a single taxpayer, your contribution limit is $4,300. If you're a family and your insurance covers your family, the contribution limit is $8,550. Those numbers are adjusted annually for inflation. We do not currently have the numbers yet for 2026. And here's a nice perk with it all. You don't have to make all your contributions during the calendar year. You actually have until the tax deadline day of April 15th to make contributions for the previous year. That's like being able to sneak in a full incinerate. Let's run some numbers and see how real the impact is. A single filer at the 22% tax bracket contributing $4,300 saves $946 in federal taxes right away. A married couple filing joint contributing $8,550 saves about $1,881 in federal taxes. That's real cash staying in your bag instead of going to the IRS. And remember, that's just the immediate effect. Here's where the real evolution happens. Say you're 25 years old and you contribute the maximum for just 2 years, about $8,600 in total. If you invest that and let it grow at a modest 6%, by the time you're 65 years old, your HSA could be worth over $79,000. That's almost like evolving a Magikarp into a Gyarados. It starts out small, but given time and patience, it becomes a powerhouse. But like any battle, there are rules. Normally, if you withdraw your HSA funds before age 65 and do not use them for medical expenses, you'll owe income tax plus a 20% penalty on the draw. After age 65 though, it gets easier. Withdrawals for non-medical expenses are allowed, but you'll just pay regular income tax and no penalty. There are a few penalty exceptions before age 65, such as disability or if the account passes to your spouse. Think of age 65 as the point where your HSA finally levels up, unlocking its full set of abilities. Now here's the part a lot of people overlook. HSAs are only paired with high deductible health plans. That means you could be facing higher out-of-pocket costs during the year. The tax benefits are amazing, but don't let them be the only factor. Always consider your health situation and budget. In other words, don't chase shiny tax savings if the trade-off leaves you fainted in the battlefield. What about you? Do you think you come out ahead with a high deductible plan, or does the extra risk make you hesitate? I'd love to hear your thoughts in the comments below. And if this breakdown helps you sharpen your financial strategy, hit that like button and subscribe so you don't miss the next one. So let's recap. HSAs give you a rare triple tax benefit. Contributions can save you close to $1,000 to $2,000 in taxes each year. The earlier you start, the more your balance can evolve into something huge. But remember, it only works if the health plan is the right fit for you. Be sure to check out my other videos covering US tax strategies for Pokemon trainers. That way, you'll never miss a chance to save. And as always, we're here to help you count them all and keep it all, legally of course. See you next time.